It's Thursday aftermarket and IREN stock has closed a little softer today, finishing the session at $32.85 per share, down about 2.3% on the day. That's a decline of roughly 78 cents from Wednesday's close, and it comes after an impressive run where the stock has been climbing session after session. The question investors are asking tonight is whether this pullback is simply a healthy pause after a big rally, or if it could be an early warning sign of something more serious. Let's break it down in detail, go through the numbers, and think about what it means for the bullish thesis we've been following so closely this week. First, let's cover the trading action itself. Today's range was fairly wide. The stock opened at about $33.21, pushed as high as $34.79 intraday, and then fell back to close at $32.85. The intraday low was around $32.06, so even though the stock finished down, it still managed to bounce off that low before the close. That's important because it tells us there was buying support when the stock dipped. Volume was heavy again at roughly 38 million shares traded, which is very close to the average levels we've seen on the big up days earlier this week. In other words, this wasn't a case of low volume drift lower, it was an active trading day with plenty of liquidity. Now, whenever we see a stock that has run so hard in recent weeks, a pullback like this is almost expected. IREN was trading under $6 not long ago. In the last month alone, it has added billions in market value, surging well past $30 and even touching the mid-30s intraday this week. That kind of move puts a lot of pressure on technical indicators. It pushes relative strength into the extreme overbought territory, and it naturally invites short-term traders to lock in some of their gains. So the simplest explanation for today's drop is profit-taking. After 3 or 4 big green sessions in a row, some investors decided to ring the register and sell into strength. Another factor is the absence of fresh catalysts. Earlier in the week we had major headlines around earnings. IREN reported record revenue of $187 million, a huge turnaround to 70 cents per share in profit, and explosive growth in Bitcoin mining capacity. We also had confirmation of their Nvidia preferred partner status, which gave investors confidence about their ability to scale AI cloud operations with thousands of new GPUs. Those catalysts fueled the big rally. But today there wasn't any new headline. Without fresh news, stocks sometimes drift lower, especially when momentum traders move on to the next hot ticker. It's also worth considering the broader market context. Thursday saw some softness in the overall tech and growth sectors, and risk assets were a little jittery. AI-linked stocks, cloud computing plays, and even some of the crypto miners pulled back. When a sector moves together, individual names can get caught in that wave even if their own fundamentals haven't changed. IREN, being tied both to Bitcoin mining and AI infrastructure, is particularly sensitive to shifts in macro sentiment. If Bitcoin dips or if AI stocks sell off broadly, IREN tends to follow suit, at least in the short term. So what did not cause the decline? There was no earnings miss today. There was no regulatory setback, no negative analyst downgrade, no news of delays in GPU shipments, nothing like that. Fundamentally, the story hasn't changed in the last 24 hours. In fact, all the positives we spoke about in the Wednesday aftermarket video remain firmly in place: record profitability, rapid mining expansion, AI cloud revenue ramping with near-perfect margins, and nearly 3 gigawatts of renewable power capacity secured across North America. None of that was undone by today's trading action. With that in mind, the next logical question is whether this pullback is a healthy pause or a red flag. In my view, it looks much more like a healthy pause. Stocks that are moving in powerful uptrends rarely go straight up without a break. They move in waves, 2 steps forward, 1 step back. A short-term pullback allows the technical indicators to reset. It shakes out the weak hands, removes some of the froth, and sets the stage for the next leg higher if the fundamentals are still strong. And in IREN's case, the fundamentals remain very strong. Let's zoom in on those fundamentals again. Mining capacity has scaled up to about 50 exahash per second, which makes IREN one of the leaders in the Bitcoin mining industry. Mining revenue is up more than 200% year over year, providing a steady cash flow base. That base is being reinvested into the AI cloud business, which is where the real growth story lies. With 11,000 Nvidia GPUs already deployed and another 9,000 on the way, IREN is building one of the largest AI GPU clusters in North America. Being a preferred partner with Nvidia not only secures supply but also plugs them into Nvidia's ecosystem of customers and enterprise partners. Even though AI revenue is still small at around $2.4 million, the margins are extraordinary, 98% hardware margins. Management has laid out a target of $200 to $250 million in annualized AI revenue by the end of the year. If they come even close to that, it changes the way the market values this company. Right now, many investors still think of IREN as just a Bitcoin miner, and miners usually trade on cyclical multiples. But as AI revenue ramps, IREN will increasingly be valued as an infrastructure and cloud provider. And the multiples there are dramatically higher. This is exactly what Eric Jackson has been talking about in his thesis. He argues that if you apply a sum of the parts valuation, looking at the mining, the AI cloud, and the renewable power assets separately, you arrive at a much higher valuation than the market currently assigns. In his bullish scenario, that number could be as high as $300 per share. Even his more conservative outlook, over $100 in the next 18 months, is ambitious but achievable if the company executes. Today's pullback doesn't undermine that thesis. If anything, it just highlights the difference between short-term trading noise and long-term value creation. Technically, the stock still looks strong. The IBD composite rating is 96. The relative strength rating is 99, which is the maximum. The accumulation distribution rating is A, showing heavy institutional buying. Even after today's decline, those ratings haven't changed. In fact, the ability to bounce off the $32 level before the close suggests institutions were buying the dip. The key support level to watch now is around $30. If the stock holds above that and consolidates, it could form a new base for the next breakout. Another angle to think about is leadership. The promotion of Anthony Lewis to Chief Financial Officer is more than just a title change. His experience at Macquarie, especially in infrastructure and energy financing, means IREN has someone steering the financial side who understands how to raise capital for large-scale projects. That matters because expanding AI clusters and powering them with renewable energy is capital-intensive. Having a CFO who can structure deals, manage financing, and align capital with growth targets reduces execution risk. And reduced risk is exactly what institutions look for when they decide whether to keep buying shares after a rally. So where does this leave us heading into Friday and beyond? I'd say investors should view today's decline as a breather rather than a breakdown. In fact, these pullbacks can be opportunities. If you believe in the long-term thesis, Bitcoin mining providing steady cash flow, AI cloud scaling massively with Nvidia, nearly 3 gigawatts of power secured, then a 2% dip is not a reason to panic. It's the kind of dip that long-term holders often welcome, because it gives them another chance to add before the next move higher. That doesn't mean the road will be smooth. Volatility is part of the package with growth stocks, especially those tied to crypto and AI. We should expect more days like this, where the stock is down a couple of percent, maybe even 5 or 10% on occasion, even in the context of a larger uptrend. But as long as the company keeps delivering on earnings, expanding capacity, and signing up new AI customers, the long-term trajectory remains intact. To sum it up, IREN closed Thursday at $32.85, down 2.3% on the day. The decline was likely driven by profit-taking after a big rally, the absence of fresh catalysts, and some softness in the broader market. Importantly, there was no negative company-specific news. Fundamentals remained strong: record revenue, a major turnaround to profitability, rapid mining growth, AI cloud expansion with Nvidia, and strong technical ratings supported by institutional buying. From where I'm sitting, this looks like a healthy pause rather than a warning sign. So the takeaway is this: don't confuse short-term volatility with long-term weakness. IREN has transformed itself from a simple Bitcoin miner into a dual-engine growth company with both mining and AI infrastructure powering its future. Investors like Eric Jackson see enormous upside, with targets ranging from $100 to $300. That kind of vision won't play out in a straight line, but today's action shows the market is willing to absorb dips, reset, and prepare for the next run. If you're bullish on the future of AI infrastructure and renewable power computing, then IREN remains one of the most compelling names to watch.